Right, this is Ken Long from Tortoise Capital with the review of the weekend trading report for November 21st, 2015. The market is back in bullish normal conditions. We're hovering right on the boundary between bullish and sideways, but there we are. On an annual basis, using weekly RSI 14, we are at 56 out of 100, just above the neutral line. On a 10-day basis, using the 10-day NDX, we are overbought at 88 out of 100. Looking at the market mosaic next, you can see that the price relative to the 200-day moving average is 2.02%. That's white bullish. So we're like 0.02% just above the boundary to sideways, but it is what it is. Slope of the 50 is green bullish at 0.65. That's healthy. ADX is neutral with respect to strength of trend. The risk index is the 30-period moving average of the VIX divided by the 10. The boundary between risk on and risk off is 1.0. The current reading is 0.932, so we were slightly into risk off. We take that reading of that reading of 0.932. Excuse me, and compare it to the last 5,000 trading days and find the average and standard deviation. That lets us compute the risk Z, or the Z score of that risk index. And right now it's at minus 0.87, so it's almost one standard deviation below the 5,000-day average. And this is a 90-day histogram of that indicator. You can see that we just had almost a 7 sigma move from -4 to +3, and then it's come down from +3 to -1. What's useful to note about this is that it is sloping up on the bottom there, and that's our early warning of a potential resumption of the long side. Should the volatility continue to decay, then that's going to be a favorable sign. Once that crosses back up into the green, then that would be a second piece of confirming evidence that the long side is looking attractive once more. Blended monthly rebalancing, you can see the positions with a new reevaluation due on or about 1 December. These are the current leaders in the ETF 13, 22, and 32 based on the close on Friday. And then winners inside the Dow 30, Nike, DuPont, GE, Intel, and Microsoft. And then among the ETF 200, just want you to notice that technology and South Korea are doing well. Sugar still looking good here among the ETF max. In ETF 2, the theoretical exposure at 80%, the model portfolio is also going to be at 80% exposed once it buys 2 positions in XLK and XLY tomorrow morning at the open. Moving on. These are the ETF 13 and 32 portfolios for blended monthly rebalancing. And I would just draw your attention to that there's only 2 symbols now on sell signal or cash signals. That's Treasuries and the Euro-Asia blend. Even Latin America is above its 4-month moving average, which is really favorable and makes me want to go look at EWZ on the long side even more. We know that's already a terrific candidate for short-term and swing trading, and this now gives us a possibility of leaning forward on the long side at a moment of deep discounted value. In fact, if you take a look at the 1-week percentage, you see that Australia and Latin America are both over 6%, as was Asia less Japan at 5%, emerging markets at almost 5%. The U.S., so basically they all doubled the U.S.'s performance in this last week. Still deeply underwater on the 6-month basis, but we like it when they have made that turn and they can't get worse anymore, and they're actually starting to lead the way up and out of the hole that we've been dug into. ETF 32 portfolio, the same kind of insights are available there. Again, about 3/4 of them are on buy signals, 1/4 of them on cash signals. Brazil is above its 4-month moving average, so it's on a buy, and it comes in at 9.69% for the last week. So I'm going to be watching very closely for additional momentum here in Latin America, which is up almost 10% for 1 week and over 11% for 1 month, and that's very favorable in that region and country, which have been the weakest of the weak for so long. This is a nice divergence. All right, moving on. Looking at the ETF Max. As you know, I like to look at things that are in the green and in the red on the 1 week percentage. These are all things that have turned in terrific blended performances over 3 and 6 months, but I like to fine tune my insights here based on the 1 week percentage. So a big smackdown in the volatility ETFs of all types. And then big winners here, China Technology, CQQQQ. The social media index is up big. UBS Softs, total return, the commodities. NASDAQ Internet and Dow Jones Internet. S&P Semiconductor, so I'm looking for more strength in Intel. And then Dow Jones Tech, Consumer Discretionary, that's XLY, which is why we're buying a position in XLY and XLK. Notice that they both turned in exceptional performances this week. So this could be, that the Santa Claus rally. Let's hope. We'll be prepared for it. Inside the S&P 500, looking at these through that same blended monthly rebalancing lens. VeriSign up 10%. Airgas, I guess we just got to go look at that one, up 36% in a week. Where was I when that was happening? I must have been asleep. Plum Creek Timber, for crying out loud, with a good dividend. I'm going to go investigate PCL. Nike at almost 9%. Intel and Raytheon at 8% or better. Norfolk Southern in the transports. I like that. So we have a lot of things that we can be taking a look at here, and looking for continuation of momentum going into Thanksgiving and the shortened trading week. So these are all either second week momentums or a rebound from things that are drastically oversold. I think I like the second week momentum. We'll certainly look at Plum Creek. NVIDIA and Amazon continue to do very well in the top 1 and 3 position, as is Cablevision was flat for the week. Could that be the sign of running out of steam? Perhaps so. So let's look at these that are green on 1 week and see if we can't frame up some trades in there. Moving on. All right, so this is the market health check, and the vertical blue lines represent 10, 20, and 30 days worth of look back. The horizontal purple line here at 212 is the all-time high and the previous swing high. Both of these happened in the last 4 months. We had that measured pullback, as you can see, down to the bottom of the river, which held at 202, and they've had the nice rebound 3/4 of the way back up the channel, and we're north of the river. We're resting right on the north skin of the dragon in a doji, so that was a sign of willingness to hold positions over the weekend. And again, if we can get north of 211 or 212 here, it's off to the races, and this last little pullback will look like a very orderly pullback on the first leg of the resumption of the bull. You can see the slope of the 30 is this sine wave looking gizmo here. This is where it crossed above the 0 line in October, peaked here in early November, pulled back, and now is actually starting to slow down its decay, and this would be well postured to resume right here. That would be completely normal behavior. And you can see that we've got price through the dragon. The dragon is resting on Bollinger Band mean support and north of the 200-day moving average, which is flat. I really like this posture here for another leg up. So if we can get another leg up, I'd be looking at the last leg up was 188, if I'm reading that right. I'm sorry, 190. From 190 to 210, that's 20 points. That's a 10% gain. So we're looking at about 220. If it can break through 212, there's another 8 points on the far side of this, just to be symmetrical with what I call leg one move right here. So 220 is in our target range. Inside ETF 2, the S&P at 65 is better than EFA at 58, so it's the U.S. over the globals. Inside the U.S., it's technology at 72, then the large caps at 65, and then small caps and mid caps in a tie here for third. The two strongest sectors, technology and the U.S. large caps. Two weakest sectors, Latin America and European 350. Inside the S&P sectors, it's industrials, technology, and consumer discretionary, all leading the way with strength. All of the consistency is above average. The only sign of weakness anywhere is in the defensive play utilities, which I take as a favorable sign, with money moving more towards risk-on types of positions. So I like that. I like that indicator. Now the world market model up next. Look, this is looking at the strength rating of all those hundreds of ETFs in the database. Inside the U.S., everything is above average, with exceptional strength in the Dow and technology. China and South Korea dominating. Only a handful of countries in Asia below average. Everything else is above average. Emerging markets are now above average. That's EEM. Latin America has come out of the red and into the yellow, at least. Mexico very strong. Brazil and Canada have both gotten better. They used to be red. Now they're only yellow. Oil, gold, and silver have rolled over once more into the red. Treasuries and private equity are now below average. Bonds and real estate still above average. The technology strength is something you're seeing worldwide, and pretty good numbers both for industrials and discretion in the global markets. So this is a shift to risk on. ETF top 30, hardly any change from what we saw in the ETF 2 in BMR readings. Semiconductors, technology, regional banks, more semiconductors. Everything that's green and then white are going to be things that are leading candidates for early emergent strength. So these are the early leaders coming around the clubhouse turn. So I like all of the things on that stack. I'm going to be looking at U.S. tech. Inside the Dow, if we want to look for some momentum plays, we would want to look at those things that are green all the way across the board, like Nike, Microsoft, Intel, GE, McDonald's are all no-brainers. They're all green and green. Visa and Travelers are pretty good. They're green on strength and consistency. New strength coming into DuPont, that's green and white, and Walt Disney, green and white. I think there's more room in both of those. You can see just 2/3 of the Dow are dominating the entire population of 1,000 ETFs that are available out there. So that's just an indicator of how strong the U.S. large cap posturing has been this past week. I see that as a flight to quality. I'm going to shift to Monday's report. We'll start with the Dow tactical summary. Only 3 symbols fire on the auto framer because of the nice run we had this past week. A lot of that easier money, and of course there's no such thing as easy money, but the easier money is already gone. So Caterpillar at 2-to-1, and then Pfizer and Goldman Sachs both at 2.5 to 1. Nothing fires on the RSI 2. and only a couple of dojis. So Cisco and Apple, to me, Apple looks pretty intriguing. I think if you want to buy the U.S., you got to buy tech and you got to have a household name. Why not look at Apple on sale? It's number 5 on the Max Pain range compression. Doesn't seem to have anything else going for it other than it closed with the doji. So we'll take a look at that when we take a look at Mark's trade frames here. I like both Apple and the gold miners, the leveraged gold miners GILD. Mark was kind enough to offer some setups for review. Tons of dojis in the ETF summary. XIV was a big percent winner, up over 3% on Friday. I'm looking for more out of XIV. And Brazil was also the big winner among the ETFs at 1.4%. A handful of overreaction shorts. I would be cautious on being short those automatically. I would wait to see evidence of market failure, and then I would look to see if they were actually losing more than the S&P at the time you want to go short. Then and only then would I be interested in getting short. Nothing firing on the RSI2. A couple frogs, XLB and Materials at 4.3 frog quality number, and Energy at 3.63. Both of those tend to trade directionally, so not only good intraday traders, but also some swing trades available there as well. Oh, sorry, Mark, thanks. GILD, Gilead, is a biotech, not the gold miners. Taking a look at the auto framer next. You see both XIV and VXX framing up pretty well, so that just tells you that they had narrow ranges on Friday and are both far from their 10-day high. That's just how volatile and crazy the market's been the last 10 days with big cycles, and so it continues to be a volatility trader's dream. But then Cliff, mixed commodities, Pfizer, Goldman, oil, and Caterpillar all looking pretty good. The regression line fractal frameworks I'll leave for you to look at here. The top shelf in the green, these are the ones that are the most numbers of ATR below their own 270 regression line, which we take to be fair value. So the more ATRs below your own fair value are, the easier it is to start framing swing trades on these key leaders. And you can see a 5-to-1 reward to risk ratio on IBM, almost 4-to-1 on Pfizer and United Health. And then the ones in the bottom stack are the ones that are the most ATRs above their own RL270. So these are going to be the relative strength leaders, and you might look at these as ways of playing for continued momentum if they make a new higher high. But DuPont right now you can see is more than 11 ATR above its long-term fair value. So that's going to be the turnaround leader in that materials sector, which is also looking pretty good. These are the daily squeezes next. And so these are, as it says, these are targets that have become compressed on a daily basis. So it has a range compression feature, in which we take as less than 0.7 of the average range of the last 30 days. You can see that in this column that I'm highlighting. The range divided by the average range. These are, so XIV at 0.34 is only one, its range on Friday was only 1/3 of its 30-day average range. So that's how tightly compressed that was. Apple at 0.5 of its average range. So another tight compression. So these things have compressed to a one-day compression, and then they also have a large potential intraday move compared to the size of their range. So we use the range stat, which is the largest reasonable intraday move. We take that number, the range stat, and divide it by that average range, by Friday's range, the compressed range, and then we use that to compute a reward to risk ratio. And so in the case of, let's just take a look at Gilead here. That's got a 2.4-to-1 reward to risk ratio. So if Gilead takes out the high from Friday, which is going to be right around 107 when we look at Mark's chart, we're going to see there's a nice potential range extension, more momentum to the upside in Gilead, and that would be the first sign that on a swing basis, maybe some big money's coming in to move that around. So Gilead is certainly one that we're interested in. Even IWM is pretty good at 2.1 here, using about $1, little over $1 of risk. It's offering a couple bucks on an intraday move if it were to take out Friday's high and then keep steaming northward for a range stat. You would get better than 2 to 1. So that's how I use that chart to sort of rapidly frame some good one-day pops on the basis of their trade location. Okay, moving on. That's basically everything I want to look at off the charts. I want to take a look at a couple trade frames Mark was kind enough to post for us in the chat room. And since he went to that trouble, I'll go to that trouble, and it's no trouble. I'll go to the trouble of looking at it. Let me pull that up now. All right, so we'll take a look at Gilead now. Waiting for it to come up on your screen. There we go. All right, so I love Mark's trade framing here. He's using support and resistance to help paint the picture. And he's noticed that there was this great big downward move. The downward move is what creates potential locations for support and resistance. You can see that he's identified some resistance in here. So if it gets back to 108, then that would be, if he had money in hand and it started to stall, that would be the place you'd expect it to stall, and so you'd like to lock in that move. On the other hand, if it gets above 108, as he has noted here, he wants to get long above 108 with targets then at 109, 110, and 111 at the little stair step of $1 at a shot. He notes that the trend is sideways or downward. He's got this descending little triangle right here, and just connecting the top of the dots, he's observing those dots. Now, what makes this a nice trade is the critical state that's available in both directions. Right? So I think you can get long at 107 because this is what that pop looks like. It was a 2 to 1 move, and it could easily get through 108 into 109 on a range stat basis if it were to take out Friday's high. At the same time, because of this triple bottom right here at about 106.5, if that fails, you can see that the next support level is going to be down here at 104. So we have a very strong case for a move to 110, but also on failure, a move to 104. And so we can have a very tight stop and expect that to actually be a reasonable stop, a reasonable buffer. And then when we look at previous price patterns, the way Gilead trades, you notice it's got these big sell-offs and then a 4-day move. Big sell-off, a 4 to 5-day move. Sharp 1-day sell-off, big move. Comes to a support level, holds, and continues to go. And when those support levels fail, notice you get the big downward move. When that one failed, it was big down. When this one failed, big down. When this one failed, big down. And so now on the upside, you have sell-off, and then you have 4 or 5 days of buying. Measured support here, and then a nice big pop. Measured support, a nice big pop. Another measured support. So we would not be surprised if it did this and then took off. And as long as we're getting higher lows, then up she goes. And he's mapped out very nicely these resistance levels at 108, 9, 10, and 11 as a ladder. And were it to get above 111, I think you could be looking at a second position on a swing. You should be able to fund that with money that was made on the way up. And so Gilead is in a very nice posture here. So I love that trade frame. The next one we'll look at is Apple. And let me clear that off for you. All right, so we like Apple based on this rebound in technology in the U.S. and the fact that Apple has been on sale from as low as 111. It's still up to 119. I think, well, is that really done? Well, all it's done is closed the gap to that very strong support level at 120. If it gets above 120, then as you can see, this move to 124-ish goes pretty quickly. I don't mind the extra resistance line here. It was a double test right here twice at 122. And so if it breaks out above 120, you can get long with the first target at 121.75. We'll call it 122, and then 124. Failure here is another option. And so if it comes off this shelf, and certainly if it gets below 118.5, I see the next support level first in this area around 117. I agree with support here. If that fails, then it's very quickly back down to 114 and then a retest of 111. So there's a critical state has developed in Apple. We don't have to pay much cost of information on this one because of the tight ranges that it's traded in the last 4 or 5 days with very clearly measured areas of support and resistance to act as triggers for entry in either direction. And so I absolutely love Apple here as a critical state, as being in a critical state with large reward to risk ratios in both directions, and just let the market pull you into the trade in the direction that it wants to go. So I think very nicely done, Mark. Really appreciate you getting those in the chat room. And just word to other folks, the best thing that you can do to improve your trading on a daily basis is to post your best trade frame idea into the chat room. You will get feedback on it, if not from me, then from some of the other traders who will probe your ideas. You'll be doing them a service. More importantly, you'll be doing yourself a service, because you will end up doing your best work in order to not lead others astray. And then you will get feedback, and it will help you see your best idea through a new lens. And that's the fastest way that I know to improve your performance. And I think Mark would agree with me that that has been his experience when he posts trade frames and then closed trade studies. Okay, so it's we're about half an hour into this. That's everything that I wanted to cover. We got some work to do later tonight, and I got to get this video processed and posted for you. So we're looking ahead to Thanksgiving this week, my favorite time of year, my favorite holiday. We're so blessed. We're so fortunate. Remember to tell those you love that you love them. Don't ever leave it unsaid. And pay forward a little kindness as you go about your business. And let's get after it this week and trade as if our life depends on it, because it really does. That doesn't mean that you get frantic, no, because you want to be professional and persistent, but you want to bring to it a professional focus on what it is that you're doing, a long-term, mature, serious, adult, caretaker mentality to the market. It takes that kind of commitment to really raise your game, and I really do think it's important to trade as if your life depends on it. We had a long discussion about that one at the last workshop in Raleigh, and I'm hoping it's on the video that I got. I was able to get a couple days worth of videotape. I'm going to add that to the tape set I'm making for the folks who were out here in Kansas City in June, because I owe them their hard drive with all the research weekend presentations, and we'll make that available to others too once I get done editing. So we got that to look forward to. There's also a possibility for a project I'm working on with Alec McInnes, who's kindly put together a plan for using Forex Tester 2 as a simulation platform. He's broke the code on how to add 1-minute bars into that, and so if I can get that working, we may, if I can get that working in the next couple of weeks, we're looking at the possibility of doing a weekend trade simulation learning laboratory in Kansas City in March, towards the middle or late part of March. We're still going to do the research weekend in Kansas City. It looks like late May or early June, so mark your calendars, the usual thing there, but I really want to pursue this idea of the trade simulator, and so this would be something where we just come in, I think fly in Friday night and leave Sunday, and do some intensive training and trading on the simulator if I can get all that working. So expect some more to follow on that. Send me an email if you already know that you'd be interested in March, so I can start looking at the at reserving slots in the hotel. So you'll see some more in writing on that this week. Take good care. I'll get this processed and posted at YouTube. So we'll see you in the chat room. And remember, post your best trade frames in there in order to improve your trading practice the most. That's the best thing I think you can do. So take good care, and we'll see you in the chat room.